All right, so we had another interesting week in the markets. The stock market is officially up on the year, at least the Nasdaq and the S&P. Stocks were up quite significantly on the week. I want to talk about that. I want to talk about Bitcoin. First things first, if you get value out of the video, please like, subscribe, check out the links below. Very much appreciate all the support. So first things first here from Mark Moss saying, I hate to see it, despite a decade of educational content, books, videos, conferences, the retail weak hands continue selling their pristine, scarce assets to the strongest corporate hands. So this is from River, basically saying businesses are the largest net buyer of Bitcoin so far this year, led by strategy, which makes up 77% of the growth. So this is an interesting chart that if you look at Bitcoin, retail has sold a massive amount of Bitcoin. And if you look at businesses, well, they've bought up a lot of Bitcoin. The ETFs have bought up some Bitcoin, and then other / governments have bought up a little bit as well. And it's kind of interesting. I think it's a combination of people just selling, because I think that there's a good amount of people that they bought Bitcoin in the hundreds of dollars, low to mid tens of thousands, or even thousands, and they wanted to cash out because a lot of these people made 100 or even 500 or 1,000 times their money, and they're rich and they wanted to cash out. That's what I think some of it is. Other parts of it, I think, is some people bought thinking that we're going to get this massive, 10, 20x bull run, which we very well could still see. But I think that there's people that thought that they were going to front run the halving cycle and thought that they were going to get rich quick, and they didn't, and they sold out. Personally, like I talked about last week, Bitcoin went up from September through like January. It went up like 100%. It went from like 55 to like almost $110,000 per coin in about 3 or 4 months. What makes you think that it can't do that again? It's done it more times than you can count throughout its history. So I think that over the next 6 months to a year, we're going to have a 3-4 month period where we go from 100,000 to 200,000 or even 250,000. I think that's probably going to happen. I could be wrong, but I think that's probably going to happen. And the reason for that is eventually the retail weak hands are going to stop having weak hands, and they're going to start buying again. And I think that institutional adoption is only going to grow, government adoption is only going to grow, and the ETF / pension fund, like that stuff's only going to grow as well. I think this is a prediction that a lot of people have made, but I think that the traditional halving cycle, the boom bust, I think it's a thing of the past. I think we're still going to see a lot of volatility, but I think these 80% drawdowns towards the end of the halving cycles, I think that's a thing of the past, because corporations and the ETFs did not exist. And that is going to siphon up any potential downside, and it's only going to create upside. I don't think we're going to see, the ups like the, 100x or even 20, 30x upsides every cycle. But I do think we're going to continue to see 20, 30% returns per year for the next decade or two. I still think that's going to happen. That's just my prediction. Obviously, I could be wrong, but that's my prediction. And again, like whenever you see the strong hands overwhelmingly buying and the weak hands overwhelmingly selling, that's just never a good recipe for the average person. I think that this is going to go down as a really bad move for average people selling Bitcoin during this time. And the one thing I would throw out is that I'm not necessarily a complete, you should never sell your Bitcoin. If you bought at 1,000 a coin or 10,000 a coin and you wanted to cash out to, buy a house or something like that, I'm not necessarily against that, because I probably will do the same thing. But I think that you should be hodling the majority of your Bitcoin. That's one thing I definitely do believe, that the majority of your Bitcoin you should keep pretty much forever. From Chris Milas, Michael Saylor is going to be the only person in the history of finance to open source and relentlessly broadcast his business idea on the whole playbook to the entire world, explain every aspect of it in meticulous detail, and still end up owning a monopoly. And I would add in, still at the end of the day, there's going to be people like, oh, it's not fair, or, all the usual crybaby arguments that we get from people when MicroStrategy is a top 10 or even the top company in the world. We're going to hear those arguments that, oh, we should tax it away and it's not fair, and all those usual just idiotic arguments. Because, number one, it's idiotic because he's totally open about what he's doing. Like, he's totally open. It's not like he's doing anything illegal by any means, right? So the people that are going to end up saying this are going to be the people that were making fun of him, the entire way up. And another post here from Chris. The craziest thing about the flood of all these new Bitcoin treasury companies entering the market is that literally 99.9% of the world has zero idea what is happening, and yet it's the biggest thing to happen in finance. And I agree with this to some degree. I think some of these companies won't last, but the bigger ones, the more successful ones, are going to absolutely kill it. And I think another important thing here too is the debt, right? The debt behind some of these companies. This is another thing that Michael Saylor talked about, and I think he's absolutely spot on, is a lot of people think that what like MicroStrategy, for example, is doing is super risky. It's so risky and they're going to lose everything. And it's like, it really isn't. I'm not saying it's not possible, but when you compare them to the average S&P 500 company, they're actually less risky, at least as far as their debt goes. Their debt is less risky. And this is something that even the vast majority of traditional finance people have not caught on to. And eventually they're going to catch on to this, and the debts, like the strikes and the BMAX, like, this is going to become incredibly popular because it's not that risky, and at least it's not as risky as traditional debt, and you're actually getting significantly better returns. And the majority of the world, even the majority of the finance world, has not caught on to this yet, and eventually they're going to catch on to this. So I think that if you're going to own MicroStrategy and these kind of companies, you should be owning some Strike and some BMAX, because it's a good way to diversify, and it's actually a good way to de-risk. So I'm dollar cost averaging both of those. I started doing that just recently here, and I'm probably going to keep doing that for the long term. So as far as stocks go, like I said, stocks had one of its best weeks in a long time, right? The S&P was up quite nicely. If you look year to date, the S&P is actually back positive. It was down, what was it down at one point here? It was down actually about 15%. It was down well over 10%, about 15% at one point, and we're actually now positive on the year. The NASDAQ has actually slightly outperformed the S&P on the year. Mid caps have actually done the best. Small caps are down slightly, so small caps have done the worst. The Mag 7, however, is still down, so the value side of the market has slightly outperformed. That's an important thing to realize. But if you look at the stock market, near term, I still think we're going to chop. I still think that recession is very concerning. I think it's probably a little bit less likely than I thought, 2, 3, 4 weeks ago. But I still think it's a concern, and in my opinion I don't think the market's going to make a new all-time high until it's confident that we're not going to see a recession, and I don't think we're there yet. I really don't think we're there yet. The big news coming out of this week as far as stocks were concerned is Trump, signing these new trade deals. And the thing about the trade deals is, yes, it's better, like the tariffs got lowered, but they're still worse, or they're still more than what we went into the year with. So I still think that that's a little bit of a concern, but I do think that we're trending in the right direction. I still think that if we see a recession, it's probably not going to be super severe, And if we do, the Fed's going to step in. That's going to be what, triggers them to, start QE and to cut rates. And when that happens, the market probably trends back up. And you also have to keep in mind that when the Fed acknowledges that we're in a recession, typically the market bottom has already been in. So that's also something to keep in mind, that, at the end of the day, the best strategy probably is still to dollar cost average. Because once everybody and their dog knows that it's a recession, the market bottom is already in. Because the smart money is way ahead of you, and they've priced that in. They've already started buying, and that's probably starting to drive the market back up. So I wanted to get into the earnings. There was only a handful of companies, not nearly as many as normal. The first one I would bring up is Walmart. Walmart had good earnings, but they kind of released shaky guidance, and that caused them, I believe that caused them to sell off a little bit. Let's see here. Actually, no, that caused them to sell off on that news, but they did trend up at the end of the week by the looks of things. So that's good news. I mean, Walmart has a very good pulse on how the economy is, and if they're going up, that's probably a good sign. But again, like I said, I'm not entirely confident. If I had to bet on, the market being, going down another 5 or 10% in the near term, or going up, past the all-time highs, I would probably still bet on going down. So that's something to keep in mind. But again, obviously I could be wrong. Cisco, they beat earnings and revenue. This is a company that I don't think I ever would buy, but they are a very big company, so I watch them for that. WMS, this is one I do have on a watch list. I've never bought them just because I think they're too expensive. They actually released pretty shaky earnings. They missed earnings and revenue. However, they were actually basically just down just a little bit on that news. So the next one is Deere. This is another one I have on a watch list. I would buy it if it got cheap enough. I just don't think it's there. This is one I definitely would want to get on a nice discount. They beat earnings and revenue, and they were up quite significantly on that news. Applied Materials, this is one I used to own. I did sell it. I just think it's a tad expensive still where it's at. It sold off quite a bit on its earnings news. It was actually trending up quite nicely on the week, but it did sell off on that news. I still think it's a little bit expensive where it's at right now, even though it is below, I believe it's below, actually no, it's almost right exactly at its 5-year average. I'd want to get it probably 5 to 10% below where it's currently at. So we're probably talking 140, maybe 150, but probably in the 140s just to be safe. And the last one here on the list is Airbnb. This is one I don't think I ever would buy just because I don't see how they can realistically develop a moat. Do people really care who they book their holidays through? Airbnb probably is the most convenient right now, and it probably has the best options, but how hard is it for someone to compete with them? Really, in the all scheme of things, it's really not that hard. So that's why I don't think I ever would buy Airbnb. I wouldn't say never, but I just highly doubt it. They did beat earnings and revenue. They were up on the week. So that is earnings from this past week. Next week, I believe we have NVIDIA, so that probably will move markets. That's something to keep an eye on. Like I said, near term, I'm just not super confident in the market. But again, if we get news of, hey, the chances of a recession keeps going down, if inflation comes down, that's going to be good news. But I still think that those are both concerns. And I think that over the next few months or so, I think we could test the lows again. But again, it's anyone's guess. For all we know, Trump comes out with policies that the market likes, and that shoots the market higher. Personally, I don't see us testing new highs or hitting new highs until we know with a good degree of confidence we're not going to see a recession. That's my opinion. Obviously, I could be wrong. So anyway, that's what I wanted to bring up today. If you liked the video, like I said at the start, please like, subscribe, comment, check out those links below, and stay tuned for more.